Good morning, all. Welcome to Anand Rathi Morning Commodity and Currency Podcast. Let's hear what today's factors are going to drive markets. Talking about precious metal update, gold's three-day rally paused yesterday as market weighed the latest Fed comments on U.S. rates, higher U.S. bond yields following yesterday's weak bond auction and stronger dollar. The latest findings in Beach Book survey, meanwhile, suggest the economy is unlikely to speed up until inflation slows further and the Fed is able to cut high interest rates. Overall, the trend in price remained cautious for the day amid volatility to persist towards the end of the week, with macro cues including GDP and core PCE index to provide further direction to the prices. Technically, for gold futures, intraday support is around 71,900 to 71,400. Resistance is seen around 72,600 and 73,200. On oil update, oil prices may remain choppy today ahead of key inventory and PCE index data. Overall sentiments remains positive as OPEC Plus is likely to roll over the production cuts into second half, tightening the oil balance sheet. Technically, for crude oil, intraday support is around 6,580 and 6,470. Resistance is around 6,730 and 6,845. For base metal update, metal prices might continue to trade within the range, influenced by declining in Asian stocks, rising US Treasury yields, and increased demand for dollar driven by hawkish remarks from official Fed officials. Investors are now awaiting second estimate of GDP figures due later today, as well as the key PCE inflation report today due tomorrow. This report, alongside in initial jobless claim, will provide the clue for central bank's outlook. Technically, for copper futures, intraday support is around 887 and 880, and resistance is around 902 and 910. On currency front, talking about dollar, is supported by strong US yield, which has shoot up around 4.62% as lack of demand in treasury auction continued yesterday as well. The sudden rise in yields will have to be watched and to gauge if this development is temporary or not. Focus turns to US weekly jobless claim for signs of labor market softening. For talking about rupee has again been pushed to the weaker bias by rising yields, playing within the range of 83 to 83.50 and buying selling where to the top or the bottom. For this continues to be the strategy that works well until election results. For today, major economic events are US GDP data, US personal consumption, US initial jobless claim, and US pending home sales, and natural gas storage and EIA crude oil inventory. So that's all for today's podcast. Thank you, everyone.